Hello, my name is Nurin Shasha binti Badrul Aisham from MBF 5A class. I'm going to present an individual assignment entitled Salient Shariah Issues in the Contemporary Application of Musharakah and Mudarabah Products. So, what is Mudarabah? Mudarabah is a form of business contract that involves relationship between one party that provides capital and other personal effort. So, there are two persons usually that involves in this Mudarabah contract. The first person is known as financier and also known as Rabbul Mal. The second person is known as entrepreneur and also called Mudarib. There are two types of Mudarabah, which is restricted Mudarabah. Restricted Mudarabah is where investors limit a working partner's activity to a specific location or type of business, while unrestricted Mudarabah, investors allow the working partner to control the fund without any regulations, without any consent. Any of the investors could do anything without anyone consent. Next, what is Musharakah? Musharakah is a joint enterprise to organize a business, any business, where partners share the profit in proportion pre-agreed ratio, while the loss is divided in proportion to the ratio of contribution. There are three types of Musharakah, which is Shirkatul Milk, Shirkatul Amwal, and also Shirkatul Wujuh. So let me explain the three of these types of musharakah. The first one is shirkatul milk, which profit and loss will be divided to ratio of ownership, where partners has the right of the share to sell, give, and also lease. The second one is shirkatul amwal. What is the difference shirkatul amwal with shirkatul milk? Where every partners need no consent of each other, meaning that they no need to ask each other opinion or consent for doing anything. So profit and loss are divided equally. The last one is Shirkatul Wujuh. Shirkatul Wujuh is where profit and loss is on ratio of ownership basis. In this Shirkatul Wujuh, partners are responsible to each other as an agent for normal costs, business, and also undertaken work. So, what are the issues and challenges in offering this Mudarabah and Musharakah contracts? It is contained specifically business risk. It is because Islamic finance it's rarely being used compared to conventional institution. There are also business partners. The second one is business partners are freely to terminate the partnerships that lead to liquidation of business. The third one is prohibited to collateralize with bank if any of the managing partner could not bear the operational loss. And the last one would be it is a fifth risky type of financing in Islamic banks. What are the views and solutions for the issues? These views and solutions are taken from the authors, banks, experts, and also entrepreneurs. So the first one is different policies for companies. So the policies to avoid any issues for this contract. So policies for small and medium companies should be treated on a basis to bear the loss, while a strong company or a stable company should maintain the original rules of Mudarabah. The second point of views and solution for the issues is element of security. So Adi Warman also emphasizes the element of security or collateral in Mudarabah financing as practiced by Islamic banks in Indonesia. In the implementations, the Mudarabah contract is maintained as a trust contract, but the financial bank is allowed to impose collateral against any customer negligence or misconduct. The third point is involve tabarruk. Banks should guarantee investment deposits by tabarruk to minimize the agency problem. The next one is solutions for the issues is higher percentage and involve element takdi and taksir. So some banks suggested that the percentage of the profit should be higher if the Mudarabah contract is implemented, because there are some issues where some banks has no interest in implementing the Mudarabah concept due to the issue of trustworthiness between the bank and its customers. So therefore, when implementing the higher percentage might as well could compete with the conventional banking landscape. For involving element takdi and taksir, scholars and experts agree that element like takdi and taksir should be involved to implement this Mudarabah and Musharakah contracts, because one of the expert called Hussein Hamid opinion is to allow liability for ta'adi to cover submission of Mudarabah assets to the Rabbul Mal even if the Mudarabah assets exceed the capital cost. Finally, what can I conclude for all of these issues? Islamic financial institutions should work out in the efforts to avoid regulatory uncertainty, lack of standardization, and several complicated issues. Then only Islamic financial institution could work on convincing the stakeholders and also clients to take the Islamic contract, which is like Mudarabah, Musharakah, and others. So that's all from me. Thank you so much for watching. Assalamualaikum warahmatullahi wabarakatuh.